to be part of that story and part of that growth. And then prior to that, I spent my entire career as an investment banker, most recently at Goldman Sachs, where I was in their technology, media, and telecom banking group, helping advise companies on going public, raising capital, and doing M&A. So overall, I like to view SoFi as a unique blend between my financial services background on the banking side and the short experience that I had at Uber and on the tech side. In terms of SoFi, maybe I'll start with our mission and talk a little bit about our product set so we can level set, and then happy to go any way you'd like. But at SoFi, our mission is to help our members achieve financial independence in order to realize their ambitions. And financial independence doesn't necessarily mean being rich. It means having enough money to do what you want. And that can mean things like having enough money to have the career that you want, or to be able to buy a house, or to be able to repay your debt, or to be able to start investing cash in an educated way in the markets. So that's our overall mission, and in order to be able to help our members get their money right, we needed to build a set of products and services that allowed our members to borrow better, save better, spend better, invest better, and protect better, all in one digital app with a pure focus on putting the member first. And the reason that that's really important is because we feel that our overall member base has been left behind by legacy financial institutions who have chosen to focus on ROE versus putting their members' interests first day in and day out. So we've taken a different approach, and we've put our members first, and we have built that comprehensive suite of services and products where we're there for them every step along their financial journey and every day in between.
Great. So 2021, incredibly active year for the company. I guess talk about, the company has now been public for a few quarters. Why moving to the public markets was important, to continue on this journey. And then talk a little bit about some of the things that you've accomplished over the past year, because there's been numerous, I think, new business lines launched and some acquisitions. So if you can just talk a little bit about that, would be great.
Yeah, so in terms of the decision to go public, it was multifaceted at the time. So if I rewind back to September of 2021, September 2020, we had recently acquired Galileo, and part of the way that we ended up funding that transaction was through a seller note. So we were sitting in September 2020. The seller note was coming due over the course of the next 6 months. And so we were out in the market trying to raise capital in a structured way for the first time since we had joined the company in 2018. So in addition to raising capital in order to pay down the seller note, we wanted to obviously fund growth and fund our overall strategy and mission for the long term. In addition to that, the momentum of the business was going really well. We had, within the past year, we had recently launched our SoFi Money business, our SoFi Invest business. We were about to launch SoFi Credit Card. Overall growth in our member base and product base was really strong. So we started, and in addition to that, we were contemplating applying for a bank. One of the key requirements of applying for that bank charter was to have a single class of stock. And at the time, we had a capital structure that had a lot of preferred equity and some common stock. So we needed to convert everything to common. So as we were sitting there in September, we were thinking, well, the business is doing really well. We need funds to capitalize on this growth opportunity ahead of us, and we need to get this bank charter, which I can talk about in a little bit. And the best way to do all of those things was to go public, and we're really happy that we went when we did. It was a great transaction and a great opportunity for us to raise significant capital. Over the course of the last 12 months, we've raised $3.6 billion of capital through a combination of a few different avenues. One was through a private round with T. Rowe Price, then obviously our IPO, and then finally we raised a $1 billion convert with a 0% coupon. So it's been an active year.
Yeah. So I've covered financials for 20 years or so, and there's always been this, I think, idea of being able to connect all the financial products together into an experience for the end consumer where they have access in one place. Obviously, you're doing that, but on a digital backbone. And this past year, some of the things you just talked about have really moved you along that journey to be kind of the single money or the one-stop financial shop. Why is it different today? How can SoFi execute on this today on a digital backbone, whereas this notion has been out in the market for decades, really?
Yeah, I think it comes back to our overall mission and putting the member first. One of the things I didn't talk about in the intro was how we're approaching the market and our overall strategy, which we call our financial services productivity loop. And the reason we think we can win, there's three components to the financial services productivity loop. First and foremost is building best in breed products such that we can win the second, third, fourth, and fifth product from our members. Second is delivering on the best unit economics, which further enhances our ability to drive variable profit and reinvest into the business. And then the third prong to our overall strategy is investing in our technology platforms such that we can build the AWS of fintech. And I'll hit each one of these one by one. So in terms of the first component or leg of the stool, we need to build best in breed products. And that's really important, and we try tirelessly to differentiate and focus on four key vectors within that. Fast, selection, content, and convenience. We try to differentiate every single one of our products across those four dimensions. On top of that, we want each and every one of our products to work better when they're used together. And the reason that that's critically important is because once someone chooses SoFi as their first product, they build that trust and loyalty, and when they need a second product or third product, they're going to choose SoFi. And when that happens, the overall revenue per member increases dramatically. We don't have a large customer acquisition cost to get them to take out that second or third product, and that puts us in a really good position to march towards our goal of having the highest LTV in the industry, which is a great driver of the flywheel because it allows us to reinvest in better pricing, better products, better features, et cetera. The second key component is having the best unit economics. And one of the keys to having the best unit economics for us has been vertical integration. We have seen that time and time again within our lending segment, where we have built end-to-end processes and solutions that has enabled us to have the lowest cost of operations, which in turn helps us provide the best experience for our members. So if every single one of our products is vertically integrated, we're gonna have the best unit economics, which will allow us to reinvest in the business. And then the third piece is building the AWS of fintech. One of our overall objectives when we acquired Galileo back in May of 2020 was obviously to vertically integrate and try to replicate what we were doing, or what we had done in the lending business. And we have certainly been able to innovate at a much faster clip and do it in a low-cost manner. But what's even better than that is that the Galileo business is a great business by itself, with high growth and great margins. And our ability to innovate at SoFi allows us to innovate faster at Galileo. And one of our main objectives for our Galileo partners is to provide them with more value than they can achieve by either doing what Galileo does in-house themselves or through another third-party partner. So enabling that innovation and investing in that rises all boats in the industry and makes everyone better off.
Yeah. Something you guys talked about on your earnings call last week was momentum around some of the brand marketing initiatives at the firm, and something that we've talked about for the last 2 days at our conference has been rising CACs and just that it's obviously a competitive environment, which I think we'll get to. But On the other hand, as you add more products, kind of you get that network effect within the platform where people seek out another product, and so the ability to bring people to the platform, you have a wider solution for them. So talk a little bit about the brand marketing, the success you're having, and then also, I guess maybe at a higher level, what you're seeing on the CAC front and how that's been evolving.
Yeah, of course, and we talked a little bit about this on our earnings call. We had really good growth in 2021 across the entire business, most notably in our member and product counts. In members, we ended up reaching 3.5 million members. That was up 87% year over year. And then on the product side, we ended up reaching 5.2 million products, which was up 105% year over year. Some of the main drivers of that overall growth was a culmination of a whole host of events, but most importantly, it was years and years of work and effort and investment that went into the company. It's things like improving our member home feed. It's things like better utilizing data to offer personalized offers to our members. It's seeing momentum in our rewards network. On top of that, it's building these best-of-breed products and continuing to differentiate across all of those and add better selection and better content. And then finally, it was about our focus and drive to building brand awareness, which is critical for a financial services company where you need to build that trust and loyalty among your user base. So with all those culminations of events and those things that are driving the growth, we saw our best year and best quarter for that matter, driven by the financial services productivity loop. We really started seeing it working. So in the quarter, we ended up adding over 380,000 new products from cross-buy. So that was a third of all products taken out in the quarter. Came from existing members on the platform, which in turn really helped drive our overall efficiencies in marketing spend. So if you look at our overall sales and marketing per new product or per new member, that was down materially, both on a sequential basis and when you look at full year 2021 versus 2020. In the fourth quarter, sales and marketing per member was down 20% versus Q3. And once you look at 2021 versus 2020, it was down about 18%. And then the only other thing I would say, which is quite staggering, is if you rewind back to when we went public at the beginning of 2021, we had an initial member target of 3 million members. We ended up exceeding that target by 500,000 new members and only saw a nominal impact to increases in sales and marketing. And we were able to hit our overall EBITDA target that we laid out, which we think is quite impressive.
Great. I want to come back to the commentary on kind of the power of the vertical integration and how you guys have executed on that. And obviously earlier this year, you received approval for the national bank to become a national bank through your acquisition. Talk about the unit economics of what that does for the business. We're still early days of actually being able to execute on that, but how does that differentiate your platform versus other firms that from the outside appear to be also looking to become kind of a single money app for their customers? And I'll have a couple follow-ons to that as well.
Yeah, absolutely. So there are a number of key benefits to obtaining the bank charter, most notably having a lower cost of funding. So if we go back to prior to having the bank, we relied on our own equity capital on the balance sheet, plus access to warehouse lines in order to fund originations. And with those warehouse lines, we would pay anywhere between 150 basis points to 400 basis points, depending on the issuer of those warehouse lines. What having a bank allows us to do is that we're able to go out and raise deposits, still offer a really competitive interest rate to our members, but significantly lower our overall cost of capital that we're using to deploy and fund originations. So that's first and foremost one of the main benefits. The second benefit is prior to having the bank, we had access to capital, but we also had the warehouse capacity, but that's finite. What we ended up doing was we would originate loans, hold them on the balance sheet for 3 to 4 months, and then sell them because there was only a finite source of funding that we had. What a bank allows us to do is, in addition to the lower cost of capital, allow us to extend that hold period. And what we've talked about publicly is that's going to extend from 3 to 4 months hold to 6 months, which also really helps the overall unit economics of our business.
Yeah. And how does the additional acquisition of Technisys fit in with this strategy, and what other capabilities does that bring to the table?
Yeah, so in terms of Technisys, this further helps drive our overall financial services productivity loop strategy across all 3 components. It helps with best-of-breed products, it helps with driving to best-in-class unit economics, and it helps in terms of our overall investment in driving towards building the AWS of fintech. As we were exploring continuing to build out our checking and savings product and moving to more of a modern cloud-based banking architecture, we realized how important it was to have a product and service that could serve multi-products in a single core technology. And we explored building this ourselves using other third parties, and Technisys was by far the best technology and company that we came across through the RFP and acquisition process. So overall, it's going to help deliver a number of synergies, and we'll be integrating it into our businesses over the course of the next few years. We expect our checking and savings business to be as well as our credit card business to be integrated with Technisys within 2 to 4 years, and other products thereafter. But overall, it really helps continue to drive the financial services productivity loop and serves as a force multiplier to our growth and overall profitability longer term.
Yeah, great. And then just to kind of close the loop on all this, so having the bank, does that accelerate your go-to-market as you think about adding new products, having that in-house versus working with a third party on additional banking products, and just trying to think through what other ancillary items might shoot off of this now that you have deeper capability and better unit economics as a result?
Yeah, I think it opens the doors for a whole host of things across each and every one of our products. We haven't laid out a specific roadmap of what additional products that we will be rolling out as a function of the bank, but it certainly opens a lot of doors for us and provides a ton of flexibility.
Yeah, great. And then just on the vertical integration, what other areas of the business should we maybe look to where you can take that same playbook, execute, and then drive a differentiated unit economic or some other aspect of differentiation in the model relative to comps?
Yeah, I think we've done a really nice job in terms of vertical integration of our lending business. We're now checking and savings is in a good spot. In an ideal world, we would like to have every single one of our products vertically integrated, so we can go through each and every one of them. But that's what's really interesting to us and what helps further perpetuate our financial services productivity loop.
Great. So looking at the big picture, this past year was a tremendous year for SoFi. Also brought to market a number of other fintech platforms into the public markets and significant capital raise. And at the same time, firms are kind of approaching adding more products and services from many different angles where there's some large firms and obviously a number of firms that are much smaller than SoFi. So what are you seeing in the broader competitive landscape around that competition? And is that it's really showing that this is the right business model and there's enough addressable market for everyone, or is this really an opportunity where the market share of SoFi is going to accelerate, you think, faster than this broader set of kind of fintechs looking to do something similar from a different angle?
Yeah, I think it's a winner take most, or it's not a winner take all type environment, and there's plenty of market out there for a lot of industry participants. It's one of the reasons that we're building the AWS of fintech, because we see there being a huge opportunity, not just for us, but for all of Galileo's partners as well as Technis's partners. So overall, we think there's a huge opportunity. I think we believe we are the only one-stop shop out there that enables people to borrow, save, spend, invest, and protect all in one device. There are a lot of companies that talk about having a super app and offering all these products and services to their customers, but we are, in my opinion, the only one that has been able to get out to market and start executing and driving growth. So we're really excited and opportunistic about the opportunities ahead of us, and think there's a ton of room for growth.
Great. On the M&A front, obviously you've been active in the past, and it's something that investors are always asking us about, kind of where there's going to be M&A in the space. And on one hand, increased volatility may create a wider bid-ask spread from sellers and buyers. On the other hand, I think it will probably shine a light on subscale platforms that don't necessarily have a real sustainable competitive edge for long term. So I'm curious how you guys are thinking about positioning for more M&A in areas that might be more compelling than others going forward from here.
Yeah, I think we're constantly looking at M&A, especially now that we have a public currency. We're fairly active. These billion-dollar deals are not going to happen on a regular basis, but we're constantly in the market looking. What I would say is, going back to vertical integration, that's one of the areas that we're focused on, and the areas that we're most keen to focusing on from an M&A perspective, versus a lot of other players in the industry who tend to go after more of a horizontal user acquisition type approach. We're much more keen on vertical integration.
Yeah, great. In terms of the recent market volatility, just a question we've been getting the last couple of days here, and clearly that's accelerated. How does that affect behavior, and does it actually drive more people into solutions where they realize that they need help, or they need to find a way to make their money work better for them?
Yeah, I think from a consumer or member perspective, being in this business and offering the products and services that we do is 100% reliant on trust and reliability with the members. So our focus, outside of all the macro headwinds and tailwinds that we're facing, is on building these best-in-breed products that deliver on what our members need day in and day out for every one of their financial decisions that they make throughout their lives. So that's what we're focused on. From a business perspective, there's a lot of noise around rising rates and widening spreads. And one of the benefits of our business overall is that we are very well diversified, not just across segments, but also within segments. We have businesses that do extremely well in low rate environments, and we have businesses that do really well in high rate environments. In high rate environments, we're seeing it right now. Our personal loans business does extremely well as people are looking to refinance out of variable rate debt into fixed rate structures, which is what we offer. So we feel like we are much more insulated to some of these macroeconomic factors that are happening and that we're living through right now. We've proven an ability to execute and differentiate over the course of the last few years, where we've constantly faced headwinds, and I don't think 2022 is going to be any different.
Yeah. So we have about a minute left, but I want to just end on kind of a future forward-looking kind of view of the business. 2021 ended on a high note for the company. It was just, again, tremendous year of growth and execution on adding more capabilities. What are you most excited about, market volatility considered, over the next couple of years for the firm? What gets you most excited, whether it's product launches or other aspects of the business?
I think the thing that gets me most excited is each and every year since I've been here and since Anthony has been here, There's been a lot of building blocks. In 2019, we rolled out SoFi Money, SoFi Invest, SoFi Relay. We relaunched our home loans business. In 2020, we ended up buying Galileo and integrating that business. 2021 was about going public and raising capital. I think 2022, we're finally at a position where all of our products are in place, at least from a table stake perspective, and we have the capital required to accelerate and further our mission and overall strategy. That I'm just excited about executing and delivering on our long-term plan that we laid out for our shareholders, our investors, and continuing to deliver on our mission for our members.
Great. We're out of time. Chris,